Joins us, and it is a tough time. You're smiling, my friend. Trust me, nobody is smiling in this market. December and everybody was smiling. February middle, nobody is smiling. It feels like, oh my god, what happened in 3 months? Kya ho gaya? 30% down for small and mid cap stocks.
So, Nikunj, we have seen market cycle. You've been tracking market for over 20 years, and these kind of phases always comes. Nothing lasts forever, and so is the this phase. Of course, we had an exceptional run last year. There's no doubt on that. And if you remember our earlier conversation and beginning of the year note which we wrote, we said, you have to keep low expectations from the year, and it's likely to be a volatile year, and which is, I think, in some sense playing out. There are, lots of uncertainties in the environment, especially coming from the, global side. And also we had got combined it with liquidity tightness last year, which reflected with a lag into the economy, which I think is beginning to reverse. So I think, these are the cycles, Nikunj, we know that they go through, and of course, nobody likes it. And it's painful, no doubt on that. But we also know that it is inevitable. So idea is to, sort of temper expectation, get back to basics and keep doing from long-term perspective, stock picking and keep remaining invested. I mean, nothing changes from the long-term conviction perspective on India story. It continues to remain strong. Good news is that there are no structural fault lines in the economic landscape. So that also is good news. So I think whenever you have this setup, at least one peaceful point is that long term is fine, well placed. There are no structural weaknesses.
So, because let's address three things which have changed. One, earning assumptions have changed. B, post sell off momentum has reversed. And C, the global regime in terms of tariff or the way how the trade would be done has changed. What, to your mind, is the right way to understand that the three reset buttons which have been pressed on earnings, momentum stroke liquidity, and tariffs? How much of that is in the price? How much of that is not in the price? Are markets discounting it? Are markets overreacting? Or the adjustment is still left?
I think to your first question, Nikunj, earnings, of course, for 1 or 2 quarter, it has kind of changed, but I don't think long-term assumptions have changed. I don't think anything is changed from the FY26 perspective. I think 14-15% earning growth next year is still part of the expectations of the most of the street. And so I don't think, I mean, of course, Q2, Q3 were a little tepid. I think largely led by the liquidity tightness in the economy, and government spending was kind of less due to elections. So I think those things were there which impacted a bit of the corporate earnings. But I guess next year nothing changes, and of course medium term to long term nothing changes. Regarding your valuation or the momentum thing, I think again markets did build a momentum. We saw that those momentum also end up creating excesses in many pockets. So it's good that once in a while one gets these kind of reality check. That's where the basics long term sanctity comes into play. Also investing it not easy. It's you have to kind of go and look for right valuation, right management, right business, and which kind of gets compromised in the euphoric market. So this kind of momentum, in some sense, brings down the sanity back to the normal, and in that sense, it's good news. Regarding a third point, I think tariffs. Of course, we are in the middle of uncertain points. This is what we had mentioned in our earlier point note as well, that we don't know how it will pan out. My own take on that is that my own take on that is that uh, of course, Trump means business, and he basically, is trying to sort of reset some of the American terms, like he gave yesterday the details about, some of the wasteful expenditure in different parts of the world in his ways, and which is not needed and not good for America. So he will make certain adjustments, but I'm sure he'll be mindful of the fact that anything he takes, which will also have impact of the in the American inflation and all those things. So these are the pull and pushes happens, which will go on, in my opinion, next 3 to 6 months. And in this journey, there will be eventually some outcome. Fact is that America cannot get overnight strong in manufacturing. It cannot stop manufacturing locally everything, right? I mean, it's impossible given the fact that their population and their cost of manufacturing and all. So it's just that little bit of, I guess they will say, I mean, as far as India is concerned, it's a import or gas from us, which is fine. So I think those kind of adjustments will be made, which I think is not bad. So in the overall process, some sectors might lose, some sectors might win. But eventually, I don't think there's any threat to otherwise long-term sort of India story, including manufacturing. Yeah, and in this, adjustment, there could be some volatile periods, and period phases which we are going through and probably might remain for some more time till the time eventual clarity comes. So that's my take on these some of the points you mentioned. But I don't think any of these are in some sense, destabilizing India's story or anything negative from long-term perspective. Good news is, in fact, I can if just take one more minute, is that two policy pivots have happened. RBI has come out and started supporting liquidity, sort of also letting rupee sort of depreciate, which is good because it is kind of not tightening the liquidity from the system. Government has given tax rebate. Government has reiterated infrastructure spending. So all those things are good in my opinion from a which market right now is ignoring. And impact of these things will be with the lag. So I think that once this consolidation is over next 3 4 months and all the bad news are adjusted digested, I think we will probably start resuming a same phase later half of this year.
All right. Good morning, Vikas. This is Shrishti also joining in. And Vikas, what we have known from you is that you have been liking the pharma space overall, and within that, you have been firm believer that CDMO space has long ways to go. And I still remember a line of yours that you shared on our channel itself, that Indian CDMO sector is poised for a growth similar to the IT boom of the mid-90s. But given the so many announcements related to tariff, and that's the biggest headline for today, Vikas, do you believe that it can actually make a dent to the structural story, or do you believe that tariff imposition and this higher tariff is not likely, and the structural story still remains?
Point. I think again, don't confuse short-term issues with the long-term, sort of structural trends. CDMO is a very long-term trend. The need for that is moving away from China, diversifying the base for innovator drugs, being sort of manufactured elsewhere. And US knows what their interests are. Just by imposing some short-term tariffs is also counter to their interest, right? So I think those adjustments will be made. It's like same thing, when IT was going through post Y2K, everybody wrote off IT, that IT is over as a sector. But we know that stock sector has grown 20x post that because, some other, once Y2K was over, new avenues of opportunities came because there was underlying need for that. So same way CDMO was an underlying need, and that will play out. I have no doubt in my mind. Short-term adjustments will be there, might be there. I mean, one can't really comment on that, but I don't think there's anything structural threat to that.
Because, we've seen that there are cycles in the market, and I'm just breaking it for our viewers. There are times when value stocks do well. There are times when mega caps do well. There are times when dividend yielding stocks do well. Last 4 years was all about PSU, defense, railways, infrastructure. So has the cycle turned for small and mid cap stocks, which is that even if a company is good or great, the bias or a negative bias towards small and mid cap stocks could really jam future returns? Could that happen?
It really looks at, it depends on what your time horizon is. From next 3 to 6 months perspective, answer is yes. Maybe small and mid cap might not come back as fast as they should. But at the same time, if you look at, slightly longer term, mid and small cap are likely to deliver good returns. To me, it reminds me of, again, Ukraine war time. If you remember, 21 was a great year from returns perspective. And Jan, Feb, March, April was a great, very, very uncertain period. Every day there was some, negative news flow, global concern, geopolitical concern, inflation concern, oil prices, commodity, everything was kind of uncertain. But if you look at in that period, whether you bought small caps or large caps, or, that vintage really delivered great return on 23 and 24, right? So same thing, I would say that, it is about company and business model and management, not really about small and mid cap. If you like a particular company and management team which will deliver over a long period of time, these are the best time to buy those companies, whether it is small company or large cap company. So of course, volatility risk in large cap can ends up being lower than the mid cap, but so is the opportunity, right? So I would say look at that way. I'm not really big believer of small versus large cap. I'm a believer of you are investing into companies and businesses. And as long as you write risk rewards in favor, one should look at that.
So, you've been running a portfolio where you like to believe companies where the rate of change could be positive, right? We've discussed that. That focus on if good is becoming bad, sell. If bad is becoming good, buy it. Where do you think in this market the rate of change, whether on the earnings front, on the management front, on the business front, is going to get better? And if yes, let's discuss some of those names, ideas, themes.
I think this year, in my opinion, there's a lot of good risk rewards fallen in favor of banks, both PSU as well as some of the private sector banks, where I think, matrices are decent. Of course, last 6 months liquidity kind of hurted them. Deposit, I mean, this whole tax rebate of 12 lakhs rupees will push more flows towards deposits because fixed income and deposits become more attractive. So I think some of these policy pivots have really been good for this sector. And I think if you see 6 months, 12 months down the line, I think, in my opinion, this sector will outperform this year the most, including absolute returns. So, whether some in PSU names, some in private names, one could look at, but that's one sector I would say this year should do pretty well, and it has also least impact from any global uncertainty which were to come. And it's a large cap sector, liquid sector. So I feel that that's where a lot of opportunity would lie.
All right, Vikas, but what exactly will you be looking at in terms of the key indicators for the markets? Because we are already done with the major events. Maybe it's the Donald Trump PM Modi meet, the budget is also off, the RBI meet is also through. But going ahead, what is that crucial factor that you will be watching out for?
In my opinion, I think all this. I think right now the mood of the market is very, very negative. It's in some sense the momentum is broken, as Nikunj was saying rightfully, and it takes time for this to build back. I would say probably next 3 4 months we would be in a similar kind of phase, but the direction of the market can decisively change if there is any Fed rate cut, or if, there's an indication from Fed side to sort of reduce the rates. I think that could probably change the decisive trend for the markets. Other than that, I think probably somewhere in Q1, if the momentum builds around the earnings growth due to the factors which policy pivots we talked about, you could really very well see again things coming back in favor of see, I mean, the sentiments change very quickly. We all know that how sentiments have changed for negative in 2 months time. Same way, I think in positive also it changed very quickly. All it takes is few $1 billion of inflows from FIs, some indications, some statements here and there. So I think, let's not overly stress about it. Let's not overly be pessimist. I would say that a lot of corrections have happened. Time corrections have happened. So the beauty is when time correction also happens, value correction, the valuations really fall into place. So even a good risk reward itself, in my opinion, next 3 4 months will start falling into place as markets start looking at FY26 earning. But one big thing I would watch out, which could be very decisive in terms of change, is the Fed rate cut as and when that happens. Whether it is 6 months away, I don't know what time frame it is, but it will happen. Now it's only a matter of time.
All right, Vikas, lovely to talk to you. And I'm going to be sending you a message to set up a coffee meeting, which is long overdue, bhai. Show के बाद message करता हूँ. Let's meet this week for sure. He's not answering also. I'm sending you a message to fix up a coffee.
Yes, of course. I always look forward to meet with you. Sorry, I missed your comment. I always look forward to,
Look forward to it.
time.
Likewise. Abhay, thank you very much, my friend. Always a pleasure. Abhay Swai joins us, Chairman and Managing Director.